During 2021, we have seen Bitcoin do some pretty phenomenal things. From the March crash of 2020, we have seen Bitcoin steadily rise in value, and we've seen this thing reach some phenomenal highs up towards that $65,000 level. And many people in this space have been calling for some additional price discovery when it comes to Bitcoin. We have had some pretty wild price predictions for Bitcoin, up of 100,000, 200,000, maybe even $1 million has been spoken about. But with the recent pullback that Bitcoin has had, what are the expectations now? Are we going into a bit of a bear market? And is this bull run actually over, or are we actually going to be looking at some new price discovery when it comes to Bitcoin? Hats off to BitBoy for actually calling out 100k. Obviously, timing is the hardest thing to gauge, and in this video, we're going to go through our price expectations when it comes to Bitcoin. Okay, guys, we're going to start off with 𝗕𝗙𝗠𝗪's platform. This gives us a pretty good understanding as how Bitcoin is currently performing, right? So here we have 6 indicators for Bitcoin. Top left here, we have that I believe that's the Fear and Greed Index indicator. Okay, so we have this just here. And this is showing us that we've actually moved up. Okay, so we're not as fearful as it has been in the case of Bitcoin. We're actually moving up from a D to a C3. So a pretty good indicator that things are looking to recover here for Bitcoin. And so Fear and Greed Index C3. Now, if we look over to the right-hand side, just over here, we actually do have the Sharpe ratio. This is the risk to rewards. This is still affected and is actually starting to, or has been actually pulled down to a grade D, which is the lowest rating that the artificial intelligence here will give a cryptocurrency. So right now there has got to be a little bit of work here to actually improve the Sharpe ratio. And again, moving down, we have moving averages are also affected at a D rating. The peak end value, however, is a B2, so this is looking pretty good. And again, on here, the 𝗕𝗙𝗪 ratio is showing us liquidity issues for Bitcoin here at a rating of grade D. And again, the profitability, though, is up there at the highest rating it can be given at an A1 rating. So right now, we have a bit of an understanding here just by looking at these technical indicators to say, okay, there is not as much fear in Bitcoin as there was previously, last week, for example. So that's an improvement. We do have potential risk to our rewards, however, when it comes to investing in Bitcoin itself, and that's probably going to be driven through a couple of factors. The first one is obviously liquidity here is also affected. This is grade D, and this actually is quite a common thing right now. Most of these cryptocurrencies we've been speaking about seem to have some form of liquidity issue. We do obviously have moving averages, which are also affecting things. So from a risk to reward elements, we obviously can look at both those moving averages, the Fear and Greed Index being relatively low, and obviously that liquidity issue affecting that risk to the rewards. Now, when we take a look at these things, it's obviously an understanding as to what is going on. But if we take a look at Bitcoin's chart itself, this is the bigger macro piece, right? Here we can see that we actually have put on here an Elliott wave theory, wave 1, 2, 3, 4, and where wave 5 is likely to go moving further forward. So in this particular theory, this actually starts out from the bottoming area during the last bull run, right? So this is actually December of 2020. Since this point in time, Bitcoin actually started to have a bit of a recovery, which was going to be into wave 1. This put the price up nice and high and had a pullback to wave 2. Okay, and wave 2 was actually a little bit overextended, and we'll get into that in a second. We go into wave 3, which is the most recent run from the March crash of 2020 through to the peak that we've seen up here most recently. This is about April time, when we saw that fantastic high for Bitcoin. And obviously, wave 4 is the recent price action that we currently seen with Bitcoin. Now, what I'm going to do is just grab my price and date range or price range here and show you that the wave 2 correction here was actually at about 73%. Normally this is about 60% for a wave 2 correction. So again, that was a little bit extended above and beyond what you would have expected for a wave. So typically it's 60%, 50 to 60%, and obviously it's a little bit extended from there. Now, again, just because a typical move is 60%, this is still valid because it hasn't actually bottomed out below this area here. So that's fine for wave 2. And if we go into wave 4 here, this is normally typically about 40%, and actually it's actually had a move of 54%. So ultimately this particular correction here is a little bit overextended in the same way that wave 2 was overextended from wave 1. Wave 4 should be 40% typically against wave 3, and therefore another overextension. The other thing that really does confirm to me that this is an Elliott wave theory and what is going on here is that wave 2 was quite a flattish wave, and it took some time to actually correct down there. And wave 4 is sharp. So basically what this means is we've had a sharp correction to the downside with wave 4, and this is because wave 2 was flat. if wave 2 had been a sharp correction, then ultimately wave 4 would have been a flat correction. They always counter each other. And again, wave 4 had the possibility of dropping down to about 14,000 as a low point, although I do not see that actually coming to fruition. And this calling 20k is possible, but it's very unlikely in my opinion. But if it does pull down there, it's still a fourth wave, but it would be very, very much an extension of the stereotypical 40% move that you would see with a wave 4. So again, doesn't really align to my thinking. Now, again, we can obviously take a look into the Bitcoin dominance. So as we speak about this all the time, we are expecting Bitcoin dominance to actually increase towards that 50% level and maybe a little bit higher before all those altcoins actually go parabolic and bring Bitcoin's dominance down towards the 30% area. And again, this is something that you've seen in the history here during 2017, where Bitcoin's dominance fell down to 37% before going up to the 50% area, slight pullback before reaching almost up to 70%. And then at this point here is where the altcoins went parabolic, bringing the Bitcoin dominance level down towards 32%. So these are the expectations that we have here when it comes to what's going to happen when it comes to Bitcoin here. So Bitcoin's dominance is likely to increase, in my opinion, up to 50%. There might be a slight pullback. It might increase towards 60% and then have that pullback down towards that 32% level, maybe even lower than that during those altcoins really peaking out up there. So again, I'm pretty confident in thinking that we're in this 5-wave theory, and we're in wave 4 at the moment, going into wave 5 shortly. And again, this is backed up by the stock to flow model as well. When we take a look at the stock to flow model, we can see lots of different pieces of information here. We obviously have lots of history that allow us to understand what's going on when it comes to Bitcoin. Now here we have this area just at the bottom, which is a crucial area of rebounding. So this low point is something that we haven't seen since 2017 or 2013. These are areas where we've seen significant rebounds that followed by all-time highs, and phenomenal all-time highs at that. So right now, obviously where we are down here, we can see that we're in a rebound area. And of course, we can see that we're well below the value line. And again, we're below the value line when we had the correction in 2017. And we also came down to this line here during the 2013 correction as well. So right now, the correction severity that we've had during 2021 is a little bit worse than that of 2017, but not as bad as that as 2013. So ultimately, we're somewhere between those two bull runs, but still on the bull run scenario nonetheless. And of course, this value line just say us the approximate value or the fair value for Bitcoin. And this actually puts a Bitcoin price prediction at 100K come the end of this bull run towards the end of the year. So right now, where we are is below this average value line, and the expectations are that we will peak above this line up towards that $200,000, maybe even $300,000 level. Now, as we get into this Bitcoin price prediction, you will see that our price prediction is pretty bullish in terms of the outlook when it comes to Bitcoin. So let's jump into Bitcoin's chart here once again and actually start thinking about where Bitcoin is likely to go during this 5th wave that we can see on the charts. Now, what we're going to do is just drive down. Make this a little bit bigger, guys, so you can see exactly what's going on. What we are really going to be focusing in on specifically is going to be this wave 4 correction to the downside. This allows us to have a bit of an expectation of where things are likely to go. Please ignore all those orange lines for the moment. These are just kind of resistance and support lines that I've been marking out in the case of Bitcoin, and my expectations of where things are likely to find some strong resistance or some strong support. And right now, we obviously found that resistance up here at about 38K, and we're having a bit of a test of that area in the last couple of days, and my expectations were that it would pull down or go through. Right now, considering the relative strength index, it's likely that we'll actually get a bit of a rebound back to the upside shortly. And with that being said, though, we're going to be talking about our price expectations for wave 5 and what I think this is likely to look like. So I'm going to grab hold of the Fibonacci retracement tool. I'm going to grab this from the high point up here of wave 3 and pull it down to the low of wave 4. And this is going to give us a bit of an idea and a bit of a flavor as to where I think Bitcoin is likely to go during this 5th wave. And ultimately, guys, we can see that the first price target here comes in at $86,000. Okay, so the first price target for Bitcoin that we should be really thinking about is that $86,495 level. After this, however, we can take a look at that second price target. This is the one where BitBoy's price prediction really kind of comes in, right? He's 100K within 500-day scenario here. Now, when it comes to Bitcoin, this actually comes in at $121,446,000. Okay, and that's only the second price target. After that, we are talking about moving up to these additional 2 levels. So that third price target comes in at $156,397. And again, that's a phenomenal price target. And it's again above that that kind of, average value or true value of the stock to flow model, right, which comes in at 100K. Now, this thing actually peaks out up here at that 4.236 extension level of the Fibonacci at $177,996. So a pretty good price prediction there when it comes to Bitcoin, just short of the 200K level, but kind of in line with our expectations when it comes to the stock to flow model. The stock to flow model does show that we should be spiking up a reasonable amount above this line, as we have done previously and the previous two bull runs that we can see here. This has put it between that kind of, anywhere between basically $100,000 and $300,000. And this particular extension level for the Fibonacci is putting this up there at $177,000. So it has pretty good potential there. And I'd be surprised if it doesn't achieve at least that. And it has the potential to potentially even extend above and beyond this. But for now, I'm going to stick with what the technical data is showing me here, which is saying $177,000 price prediction for 2021's bull run, which will be a phenomenal price discovery for Bitcoin. And I think many people will be taken aback by this, considering there's some of the narratives that are currently out there when it comes to Bitcoin and saying that we're going into a bear market or potentially expecting $20,000. And again, like I was saying, dropping down to $20,000, it's possible for sure. But it does affect this wave 4, and it really does extend above and beyond the expectations of a wave 4 correction, which would only stereotypically be 40%, and it's already at 54. So dropping down even lower makes this thing look, very, very heavily corrected and potentially entering into a totally different scenario outside of wave 4. So again, we'll have to be monitoring that situation, whether that is something that's likely to happen or not. My expectations are that we will not be going below 30. But again, anything in crypto can happen. And Chris, I've obviously gone through quite a bit of technical information here when it comes to Bitcoin, right? We've been through EVI's platform. We've had a look at the fear and greed index specific to Bitcoin. We obviously had a look at liquidity issues and the risk to rewards. We obviously have had a look at the bigger picture, Bitcoin's dominance, the stock to flow model, all this kind of technical information. But what about those fundamentals?
Yeah, I mean, for me, you've got the Lightning Network, so you can now send Bitcoin really fast, and obviously there's some adoption there, so it's already being used. So it's not like it might work. Obviously, you've got to be able to scale it up, But with that said, you've also got Harmony One working to do a bridge for Bitcoin as well. There's just so much going on, and if you missed our Harmony One interview, do check that out, because there is some really interesting stuff on the horizon, excuse the pun. But yeah, you've got all of this stuff. You've got the FUD going on in the background around green energy, and actually there's I guess with some of these other countries around the world, they've got a surplus supply of green energy. So it is just FUD. There's lots of ways to sort of look into this, and I guess it's what lens do you look through, and we've got to be able to look at some of these news articles around Bitcoin, cryptocurrency, regulations, and sort of look to discredit some of the misinformation that's out there, and that is challenging to do. And again, with YouTube and Twitter and the influencers, it's really important that you go and do your own research. I can't stress that enough, because there are people in this space that we're aware of that are shilling coins and projects and stuff like this, and not disclosing that it's a paid promotion and stuff like that. So just be careful out there, guys. We can't give financial advice. We're not financial advisors. But what I can say is Nick and myself are hodling, and we don't think that this is a bear market. Although there are being some traps set for the bears and the bulls. Ultimately, we know that adoption is coming. It's there. You can see it. And you only have to have a look at the wallets that are buying and selling Bitcoin to understand this.
Absolutely. Guys, hopefully you found this video useful, informative, maybe even entertaining at times. If you did, then do go ahead and hit that like button for me. We both really do appreciate it. And of course, if you happen to be new to the channel and you'd like to stay up to date with the new cryptocurrencies, the hidden gems, the technical analysis and news, then do go ahead and subscribe. By subscribing, you will be kept up to date with absolutely everything we do here. Make sure you tap that bell and hit all, and you won't miss a single video. Right, with that said, done and out of the way, guys, we hope you have a fantastic day, and we'll catch you all in in the next one.
Yeah, take care.